Good morning, investors and corporate. Welcome to SET Digital Roadshow third quarter 2023 performance review. This session will run about 45 minutes, including Q&A. Company will start the session by 30 minutes presentation, followed by 15-minute Q&A. During Q&A, investor may leave your question in meeting room chat box or you raise your hand function. We will open your microphone so you can ask the question to the company directly. May I now invite PTT Global Chemical Public Company Limited to start the presentation.
Okay, thank you very much and welcome to PTT Global Chemical session with SET. Before we go into detail, would like to preempt in terms of the sustainability development of the company. On this page, you can see that for GC, we are well recognized in terms of the sustainable leadership, both international and domestic. On the top left, you can see that this year, clearly we got the score for the DJSI that we got 87 out of 100, and so far we are able to achieve the highest score in the chemical sector, which is the things that we continue in the past 10 years. If we look back in the past 4 years, during 2019 to 2022, we got the first rank in the chemical segment globally. And this year so far, we got the highest score as mentioned, and we expected that we might be able to achieve as where we are. Next, for today, we would like to recap on 3 areas for the strategic execution, financial highlight, and the market outlook. On the first segment, for the first full page, there's the overview of the PTTGC business, which I think you might already familiar already. So maybe I move to on the page 9. On the page 9 is the thing that for GC we have a 3T strategy, what we call a 3-step strategy that you can see on the left hand side, that we are focused on the high growth in the market, which we start to focus in the global mega trend. For the global mega trend for our 5 business area, range from upstream, intermediate, polymer, bio, and the performance chemical. We try to focus in the segment that identified to be a high growth for the future of the company, range from the climate change and energy transition, demographic shift, health and wellness, urbanization, and disruptive technology. This area is the area that we try to focus more in order to find the growth for the future. In terms of the 3-step strategy, what we show on this page, just to recap on this, we have the first one, what we call step change, is about to enhance our competitive advantage of the existing business that we have. For the step out is to try to penetrate into the high value product business as well as the low carbon footprint business as well. For the step up is about the sustainability development, and for the last one is about the enhancement for our transition that we focus in various programs in order to support the company strength and the cost competitiveness. Altogether will help us to achieve the target that we set for 2030. As you can see that we like to transform our business portfolio to have a performance chemical around 31%, which shown in the orange area in the top right of the graph. Currently, we have this business only 20%, but we think that we can increase and expand in this area to be 31%. By having this portion, it will help us to improve the quality of earning as well as the margin as well, because for the performance chemical, it's quite resilient throughout the cycle, not like the commodity business that we have in the past. On top of that, in terms of the net zero, based on our roadmap, we think that we will achieve the net zero in 2050, which we will elaborate more on this in terms of the decarbonization strategy and the sustainable development. In terms of the step change, the first strategy that I already touched, that we are focused in terms of the enhanced competitiveness of the existing business that we have. On the left-hand side, you can see that recently we have a lot of development in order to extend the value chain of the business and in order to strengthen in terms of the profitability of the company. In terms of the downstream enhancement, the polypropylene chain, which we invest under the company called HMC Polymer, is a complete expansion of the specialty grade of the polypropylene capacity, roughly about 250,000 tons in late of 2022, as well as in terms of the invest in the company called AVT, which is formerly called Vinitai, is a leading in the PVC producer. Currently is still under the expansion of the new capacity that will help to double the PVC capacity in the next few years. In terms of the feedstock flexibility, we just complete the project, what we call OMP, or the olefin modification project, and which is the project that we modify one of our ethane cracker to use the propane as a feedstock as well, and that will help us to have more flexibility in terms of the optimization of our production, and as well as able to utilize the various feedstock in the market that will help us to grab in terms of the opportunity and the cost competitiveness. In terms of the improved cost competitiveness, on the bottom left, you can see that we have a various project that we implement in the past few years, and we still continue on that in order to optimize the cost and the cost reduction. On the right-hand side, you can see that we have focused more in terms of the market focus business transformation, which are in the next page. You can see the example of it. It's the thing that how can we enhance the competitiveness of the business, especially in terms of the polymer business, from the commodity grade to be have a more special property in order to catch up with the niche market. That will help us to resilient during the cycle, and the customer will stick with us. It's not only in terms of the price, but also the property of the product as well. In the future, we like to increase this HVP, or the high value product, in the polymer portfolio from 37% right now to be 56% in 2030. On this page, you can see that in terms of the olefin modification plan that already touched, that help us in terms of the feedstock flexibility. So that is one thing that we can use the 90% of the propane to feed in the one of our olefin cracker instead of using the ethane and the LPG. So it's the thing that it help us in terms of the feedstock usage, that if the gas cost of the propane is decreased, we can use it to replace the water. As you might see on the right-hand side, that in the past quarter, they have a competitive in terms of the propane gas, and then we can shift partial of our portfolio of our feedstock to use the propane in that period, and that help us to improve the margin. In terms of the product development, on this page, as I already touched, for our HVP product, the high value product, in terms of the polymer chain, that we try to focus more in terms of the strategic platform, range from flexible packaging, rigid packaging, construction, and emerging market. That will help us in terms of the niche market capture. As you can see on the bottom of the page, we develop a various product that help the customer doing business well, as well as in terms of their cost saving as well. So it's the thing that we will be a good collaboration and a good partner with our strategic customer and that help us to secure the market as well as the volume well during the high competitive. In terms of the step out, it's about the finding the new opportunity in terms of the high value business and low carbon business. On the left hand side in the orange box that we call the specialty and the performance chemical is what we have invest in the new business under the company called Allnex Chemical almost 2 years ago. That helped us to penetrate in terms of the coating resin across the globe. So that is the thing that helped us in terms of the new market, not only the new segment, but globally in terms of the market, as well as in terms of the margin, because this kind of business have resilient in terms of the margin during the high volatility. In terms of the low carbon, you can see that GC itself have development throughout the period from the bio-base that we start to invest almost 10 years ago in nature work business and the PTT MCC, which is two of the bioplastic producer for the product called PLA and PBS. We also have a bio-based chemical for the palm oil base and the taro base in Emery oleochemical, and one of our subsidiary company in Thailand, which is a listed company called Global Green Chemical or the GGC. Recently, we have a development in terms of the circularity of the recycled plastic under the JV company called Envigo, which just start the commercial production. But we also have a collaboration with the various segments, both public and private, in terms of the various projects like a U-turn, that we have a collaboration in terms of the reuse and the recycling project. For the last strategy is about the step up. It's about the net zero target by 2050. Based on that target, in the medium term target by 2030, we like to reduce the greenhouse gas emission about 20%. And for the next, it's about 2050 to be the net zero. We anticipated that we can achieve this strategy based on 3 strategies, range from a portfolio driven is to reduce the investment or doing business in the high carbon business. The efficiency driven is about the improve our existing production to have a less emission through various aspects. And lastly, it's about the compensation driven. It's about the like deforesting, the CCUS, the new technology, or the carbon credit. On this page, it's just to give you some example what we have done for the step up strategy. It's a decarbonized project that I already touched. For the efficiency driven, you can see that we have done a lot of the improvement. For example, the process optimization, the solar or the renewable energy that we bring in our business. For the portfolio driven, we try to add more the green business or the recycle business in our business portfolio as already touched. Especially for Allnex itself, even it is a specialty chemical, but comparing with the peers in the industry, is have a less emission on parallel. And for the last one is about the new technology that we try to find, like a CCUS or the forestation project that we have collaboration with the public and the private segment. So that's all together, we quite confident that we are able to achieve the target for our long term.
Okay, so for this next part is on the financial highlight and the outlook. So for the update for the Q3, I think for the overall in the macroeconomic, you can see that the economic situation still challenging, especially in some country like China, that the recovery is still slow, especially if you compare to the pre-COVID level. You can see that it's still below that level. And so that's why if we look at the petrochemical sector, it's also affected by the economic as well. And also added on with the pressure from the high supply, which means that there's still excess supply remaining in the global market, whereas the demand is still quite slow. So we still see that in the third quarter, we're still in the challenging situation, and the outlook that we see going forward in the near term still quite challenging, as we still have to wait for the demand recovery to pick up. However, in the third quarter, we can see there is the improvement in the crude oil price and also in the refinery product. This is mainly in line with the tight supply in the global market, and also the continuous control on the production of the crude price by the OPEC plus country. So if we look at the summary of the financial performance for PTTGC, even though we had the challenging economic situation, as I mentioned, you can see that the EBITDA for GC improved quite well, actually improved by 80% compared to the second quarter, up to around 12.3 billion baht, the adjusted EBITDA. For the net income, we also got quite a strong improvement as well, up to around 1.4 billion Thai baht. The main driver for the improvement in the performance, as I mentioned, mainly coming from the refinery segment, which we see that the GRM improved from around $6 per barrel in the second quarter up to around $12 per barrel in the third quarter. This is in line with the improvement in the crack spread in the market, which helped to improve our upstream performance segment. Other than that, in the petrochemical segment, the main driver is the improvement in the utilization rate of the olefin cracker, which in line with the commissioning of our OMP project that Khun Jitasak mentioned, which helped to the company to use the propane as the feedstock, added on to the flexibility of our olefin cracker. And at the same time that the propane price was quite competitive in the third quarter, we were able to fully capture the profitability from this project during the third quarter and increase the utilization rate of the olefin cracker as well. So that also translates into the higher sales volume for the polymer product, which increased by 7% from the previous quarter. So you can see that even though the polyethylene price in the third quarter was flat compared to the second quarter, we got improvement in the EBITDA in the polymers and chemical due to the reason that I mentioned. And lastly, just like to mention on the performance chemical segment, which mainly is coming from Alnex, which you can see that there is the improvement in the Alnex performance in the third quarter as well, mainly driven by the increase in the sales volume, especially in the Asia Pacific region, and also the result from the Alnex continuous control on the operating costs as well. Next, on the market outlook. On this segment, we'll update to you on the outlook on each of the product segment, as we mentioned. Firstly, starting on the crude oil price and the refined product price. So far, we can see that this year crude oil price has been quite at the high level, driven by the control on the production side, as well as the geopolitical tension as well. So from this effect has actually continued to impact into the higher cost for the petrochemical segment as well. For the refined product at the bottom of the page, you can see that the refined product has also been quite strong this year, especially during the third quarter. And we see this trend to continue going forward into the fourth quarter as well, but maybe not as strong as the third quarter. But we still think that the diesel level should still be quite at a good level at around, as you can see in the fourth quarter so far, averaging at around $20 per barrel for the diesel crack spread, which normally is supported by the peak seasonal winter demand and also the less export coming out of China as well. However, for the other product may be softening, especially for gasoline, which in the fourth quarter will not be the end of the U.S. summer driving season. And for the fuel oil, you can see that there will also be ramping up of one of the refinery in the Kuwait as well. So that will push some more supply into the market for the fuel oil. So next for the petrochemical segment, we would like to go through each of the end segment of the demand, so we can understand how will the demand recovery outlook be. So if we start first on the automotive segment, you can see in 2023 there has been some improvement in terms of the total number of car sales globally. Compared to the previous year, which is mainly driven by the demand for the EV and also the improvement of the chip shortage situation. So the automotive sector overall has been improving, but you can see that if we compare the total sales number to the pre-COVID level, year 2019, you can see that it's still less than that. So we think there's still a potential improvement for this segment in the next year. For the textile at the bottom, you can see in the total textile sales amount in China in 2023 in the orange line, which you can see that compared to 2019 is also still below that level, which reflect that after COVID so far the consumers still haven't resumed back to the normal spending level yet. So that's one of the reasons why there hasn't been that much improvement in the demand for some of the textile chain, which mainly impact into our PX, PTA, and PET chain. The next page, this one on the packaging. So you can see the packaging mainly will be in line with the overall consumer spending and the global economic situation, which so far this year we can see the level has also dropped off in line with the slowdown in the economic situation as well. And lastly, for the construction, I think this one we are aware that there is the construction slowdown, especially in China. So that also impact into some of the end product for some of our chain, mainly for the phenol chain and also the polyol chain as well. This one show the industry outlook. If we look at for our specialty chemical, focusing on Alnex, you can see that the end market exposure is quite evenly split. On the left-hand part of the page, you can see that the specialty chemical will go into the automotive sector, industrial food, packaging, and also the construction. The outlook for the fourth quarter, so far you can see that automotive remain to be the one sector that is quite strong across all the region, supported by the growth in EV and also the improvement in the supply chain situation, as I mentioned. So around 25 to 30% of our next product will go into this segment. For all the other segment, you can see it's still quite flat. This is mainly overall in line with the economic situation, which is driving the overall demand for this end segment. Okay, and this is the last page, which we would just like to summarize on the outlook that we have for the next year. On the left, you can see that we are showing the outlook in terms of the new supply of petrochemical product that will come into the market. which you can see that for PE, which is polyethylene, our main product in the dark blue bar, you can see that new supply coming to the market will be much less compared to 2022 to 2023. So that means we are in a more better shape for the improvement in the demand and supply balance for the polyethylene. Whereas if you look at the PP, which is in the blue bar, there is still plenty of supply to come in the next year. So it means that it might be slower to recover compared to the PE. And of course, we also have to monitor on the crude oil price and also the demand recovery for the segment next year. If we look specifically for the GC, you can see that next year we plan to fully run all our upstream plant at close to maximum capacity because we will not have any major turnaround plan for all of our plant next year. So we should be able to continue to run our plant at full capacity, and there should be the improvement in terms of the sales volume as well. The other factor that will be quite positive for GC is the improvement in the ethane flow that we will get from our upstream source, which is PTT. So we expect that in line with the ramp up of the gas flow out of the Era 1 gas production site, we should be able to obtain ethane improve from the current year by around 15% in overall in the next year. So with that, should help to improve the overall profitability for our olefin chain because ethane will continue to be the most competitive source of feedstock for GC. And next year, for the specialty chemical segment for our next, we expect that the trend should continue to be gradually improvement. And our next has just completed the construction of the China hub this year. So next year, they will be able to fully capture the growth that we expect to mainly coming from the Asia region. And lastly, on our refinery plan, since next year, Thailand will start to adopt the Euro 5 standard for the diesel, for the sales of diesel in the country. So actually, GC plant or GC refinery is already ready to produce Euro 5 grade diesel without any need to upgrade or to shut down the plant to upgrade. So we're fully ready to produce that.
The session has come to the end. Thank you very much, investors and corporate, for joining the conference. If you do need further details, please feel free to drop us an email. Thank you very much. ขอบคุณครับ